Hi, this is Zach Meir with the US Chartbreakers here at Zach's Traders Cafe for Friday the 28th of July. Starting off with the S&P, which is looking a little bit tired now. We've had the scare of bearish divergence last week, and now we've got bearish divergence again. So we had a higher high yesterday, but lower RSI trace, and so that means that the idea of just finding support around 45.20 and then going back again, up again, would be slightly less secure now, less certain. Maybe the more logical thing would be to assume for 44.60, which was basically the early July resistance coming in as support. But certainly keeping an eye on whether 45.20 or so will hold. The low yesterday, 45.28. On the upside, through 4600, looking for 47.20 or 30, in fact, at that August resistance line projection as soon as the end of next month. But maybe the ideal thing is we bounce off 44.60 and then head up to that potential target. On to the stocks, and we've got a new name starting off with Cutera, and here, rising trend channel base, that's been in place since May, and shares gap through the 50-day moving average, which is already rising, which is normally a good sign in these things. The gap higher really effectively gives us what I call the handbrake turn on the price action, so that should catch out a few bears. Above the 50-day line at 1630, looking for the top of that channel just around the $22 mark, and that will also fill at least one of the gaps down that we had back in May. Moving on to a stock which was covered quite recently and has delivered the goods, one could say. And here you can see that Evolus has managed to gap higher through the 50 and 200-day moving averages. Old resistance on the way down around $9.30, and above that we're looking for $11.50 as soon as the end of next month at the top of that broadening triangle from back in February. And next stock is one which is also on the front foot, as also by definition most of the stocks here are going to be. Equitrans, so here we've managed to hit previous resistance line target. That was around the $9.50 level. Above that, we were upgrading the upside to as high as $12 by the end of next month. $12 being derived by that resistance line projection from last August. So hopefully we'll see that by the end of this August while we're above the $9.50 level. Moving on to a situation which is moving quite quickly now, with a rising trend channel base there from back in March on the First Foundation daily chart. We hone in on the price action. You can see that we gapped through recent resistance yesterday, so that neckline resistance around $5.70, and above that looking for it up to $9 as soon as the end of next month. Nice rising 50-day moving average there as well, after the effectively a triple bottom there for the shares since May. On to stock which is also looking as though it could have a turnaround from the lows. We had a full storm there in terms of the price action towards the 50-day line for Invo at the end of last month, but it looks like it's maybe second time lucky. The reason for saying that is that we've got a broadening triangle from basically back in April, but the really steeply rising RSI indicator, the uptrend line there in the RSI window, giving the impression that it's a bear trap gap reversal from below $3 and above $3, looking for not only the 50-day line around $4.40, but up to as high as $10 over the next 1 to 2 months. Stock which is relatively frequent here on the chart breakers is ICZoom, and here shares managing to easily consolidate at the top of that rising trend channel from March, which was our first target around $7. Above $7, looking for a March resistance line projection as high as $10.50 to be hit by next month, and it looks like the progression there is starting to accelerate. Haven't looked at Meta for quite a long time. Not much has changed there, just a very, very strong uptrend. The rising trend channel there from back in November, and we gapped briefly to the new highs while we're above the floor of the gap there around $301. Still looking for further upside, perhaps up to as high as $360 over the next 4 to 6 weeks. But maybe just keep an eye on whether this may be just a bull trap top, and so therefore the $3 level really needs to hold. $300 level that really needs to hold on Meta platforms. Stock which has been appearing almost every day here is Pagaya Technologies, or Pagaya Technologies. Here we briefly hit our target, which was basically that resistance line there, yesterday's high around the $2.60 level. End of day close through 260 could open up a new target there as high as $3.25 by the end of next month, but we really want to stay on the right side of $2 ahead of a potential breakout if we actually get one. And going on to a stock which hopefully will hit all its targets. New one here, Royal Carribean Cruises, gapping through resistance after the bear trap gap reversal and another gap back in the spring. Looking for the top of that rising trend channel from March as high as $123 to be hit by the end of next month, while we hold above the recent resistance area around $105. Stock of the week in terms of the speculation around it and the fact that we were calling it higher earlier in the week before the latest jump is Tupperware. The pattern here was a broadening triangle reversal, a broadening triangle base, and our initial target here up to the $2.60 level. Above that, we're looking now for a retest of yesterday's high and up to as high as $4 by the end of next month. But ideally, we stay above, as I said, the $2.60 April resistance line projection. But shares on their way really after that unfilled gap through resistance that we had at the start of the week. Tilray is the next contender, and you can say that it's maybe not as dramatic as Tupperware, but still we've had a gap through resistance, and with the support, notional support there around the floor of the gap down that we had back in May. Overall, it's a bear trap island reversal, which is good news and suggests that above that $1.90 area, we could head up to the resistance on the way down, which was as high as $2.80. And maybe we could see that by the end of next month. Nice bullish divergence here as well. So lower lows during June, but the RSI started to kick higher. On to the last few. First one is a new name, and we'll see how we're doing with Urogen. Obviously a massive move to the upside yesterday through the old peak there from May, around $16, above $16, looking for this stock to head up to an early 2022 resistance line projection, or early 2023 resistance line projection, actually, up to $22 by the end of next month. So above 16, looking for 22 on Urogen. On to the next contender, which looks as though it means business too. Massive unfilled gap to the upside. And really, there was no sign of it, let's say, with the price action before. We sort of had a double top there for June and July. Current position, though, is that we are looking for the shares to remain above the old late 2021 resistance around the $6.35 area. Above that, we could hit as high as $9 by the end of next month. View is next, otherwise known as View Inc. And here you can see that it just looks as though we've based of late near to the 50-day moving average, the blue line there. Nice close for this market after a key reversal to the upside. The view here is that the longer we stay above $10, and that resistance line there from May, the greater the chance of a move up to as high as $19 over the next 1 to 2 months, backed by that steep uptrend line in the RSI window. We've looked at 20th century group for a few times in the recent past, and I have to say it's a very volatile looking situation. We gapped down from that brief bull trap towards the 50-day moving average. Ideally, we'd like to see an end of day close back above the top of the gap down that we had, $3.74. If we can get that, then we could be looking at heading back towards the $6 area by the end of next month. That's it for me today. More updates tomorrow.